Then you have the trade payables. Okay, let's prepare the trade payables account. Okay, so in the trade payables account, we know it's a liability account. Okay, so so he has said that the trade payables at the beginning was 3750. So it's going to start on this side. Okay, it's a liability account. So on 31st December 2021, balance brought down is going to be equal to 373750. Okay, 3750. Now, and then what happens, there is going to be some purchases. Okay, that is going to happen. So purchases, okay, which is going to go into the income statement. So credit purchases were around, so then purchases will happen. So purchases is going to happen. The credit purchases were around 13,500. So 13,500. Okay, it's a liability account. Purchases is going to appear on this side. Okay, 13,500. And then how much was paid towards the purchases? We had already seen the purchases where they had paid 15,000 in the bank. Okay, so bank, it was 15,000 was paid, and then we have to balance. There is no other information, so let's balance this. So balance brought down on either side. We can see that, okay, this is 16, this is 17 to 50. Okay, this becomes 17 to 50. So 17 to 50 on either side, and balance brought down, balance carried down as on 31st December 2022, 31st December 2022, it's going to be equal to 2,250. Okay, so 2,250. So that is also equal to the balance brought down on 1st Jan, on 1st Jan 2022, balance brought down will be equal to 2,250. Then we have prepare the art materials trading account for the year ended 31st December 2022. So let's prepare the trading account for the profit and loss. Okay, and the this one. Okay, trading account, here there is no debit credit. So it's income. Okay, the first one is going to be the income. Okay, revenue that's going to happen, and then you will have the, you'll have to calculate the gross profit. Okay, in for this you have to calculate the revenue. Then you might have the opening inventory, then plus purchases, and then less the closing inventory. Okay, closing inventory, and then you will find the cost of sales, and from the cost of sales you will calculate the gross profit. Okay, so now let's include, okay, what was the opening inventory? Okay, opening inventory here, it is given as 6450. So let's write here So opening inventory is going to be 6450. Then you have some purchases. So the purchases were at 13,500. Okay, we had seen the purchases were around at 13,500. And then they have given an information about the profit as a percentage of revenue is 10% of the sale. So the gross profit we can find out. Okay, so okay, the gross profit, they are saying it is 10 percentage of the revenue. 10 percentage of revenue. Revenue is going to be equal to, we saw that the revenue that happened was 16,000. So income was 16,000. Okay, we can call it as revenue. Revenue is 16,000. So 10 percentage of 16,000, that is equal to 1,600 is the gross profit. And 600, and this will become the, so this cost of sales will become 90 percentage of 16,000. So that means the gross profit will be equal to 14,400. Okay, 14,400. Then we have the, we can calculate the, we have the cost of sales. So we can calculate, okay, we can calculate the value of closing inventory from this. Okay, so this is 6400. Okay, here we can do the working. So 6450 plus 13,500 plus the closing inventory minus the closing inventory minus the closing inventory is equal to 4,400. So which means closing inventory is equal to 14,400. Okay, 14,400 minus 6450 plus 6450 plus 13,500. So that is equal to 19,550. So that is equal to 555. So that is equal to 5550. Next one is prepare the income and expenditure account for the year. Okay, so now let's write the closing inventory, that is equal to 5550. Then we have the closing. Okay, now next prepare the income and expenditure account for the year ended 31st December 2022. So income and expenditure account. Okay, let's prepare. So again we will have the, again we are going to have the income which is from the subscription. Okay, income we will have from different trading account and other subscriptions in the club. So the first one is the income, and then you will have the expenses. Okay, So the income is going to come from subscription. Okay, the income is going to come from the subscription, and then this trading art materials trading account. Okay, so the profit from the art shop. So you can say that profit from the profit from the art shop. It didn't have any expenses, so you are going to take the gross profit itself. Okay, so there are no overhead expenses, so it is going to come from that. And also they are receiving the rent. Okay, so they are renting out the premises and they are receiving, so rent received. So let's put all together. So the subscriptions for the year, we saw that the subscriptions for the year were 68 at 250, that is 70,000. Okay, that has to go into the income statement. So it is 17,000, and profit from the art shop was 1,600, and only 12 months of rent has to go. So 12 times, okay, it is 12 times 500. So it is equal to 12 times 500. So that is equal to 6,000. Now let's add up all the income. So the income is going to be 24,600. Okay, now let's look at the expenses. So the expenses that were incurred were, okay, operating expenses, and there is a depreciation of the non-current assets, operating expenses. So they said some operating expenses, and then there was depreciation. So and then because there is a non-current asset, there is also a depreciation in value that has happened. It has got revalued, and then we will have to see is there any other thing. They had said some irrecoverable debt. Okay, so then irrecoverable debt. So let's put that. So operating expenses were around 18,000. So 18,000, and then depreciation. So it has changed, okay, in value. At the beginning the value was the non-current assets value was 20,000. Okay, now it has valued at 15,900. Okay, 15,900. So this difference in the valuation is the depreciation, which is 4,100. So 4,100. Then irrecoverable debt, okay, which we had already calculated, okay, when we were preparing here, it was around 1,800. Okay, some members had not paid the subscriptions, so 1,800 was the irrecoverable debt. Now let's add up this total expenses. So the total expenses 18,000 plus 4,100 plus 1,800, it is 24,800. So 24,800. Now this is the, we have to subtract. So we will get the surplus or the deficit. So we can see that this is more by 200. So we have a still a little bit of deficit of around 200 for the club. Then next question is evaluate the financial position of the Quarry Art Club at 31st December 2022. Okay. Again, these are the pointers. Okay. Don't use this. This is for the exam. Okay. This is for the pointers which I will use it to say what I will need to say as a paragraph here. Okay. So whenever you are saying what is the positive points, okay, what is a positive point when I'm talking about the financial positions. So financial position, we can see what is the change in the current assets. Okay, what is the change in the inventory? What had happened to subscription? Okay, can we comment on the accumulated fund or the deficit of the year? Then you also have trade payables and a bank overdraft. So you're going to comment on all these parameters. So if you see, okay, then we need not comment about the net current assets. So valuation it is just a depreciation which is business is following. Then our inventory of art materials, it was 6450, and now the inventory has become, okay, the inventory has been reduced from, okay, it has been reduced from 6450 to 5550, which we had already calculated here. Okay, this is a closing inventory. So which means that, so the inventory was less, inventory was tied up, right? So this is the first one. So we can see that there is less inventory tied up. The positive thing is less inventory has been tied up. What about the subscription in arrears? Subscription in arrears was initially 2600. Now what has happened to the subscription? Okay, subscription, we can see that it had become reduced to 750. So we can comment on the subscription. So we can talk about subscription in arrears has reduced, okay, from 2600 to now just 750. Okay, it has happened. And what happened to the balance, the bank balance has been restored. So which means that what is the bank balance was 900, okay, from 900 deficit, okay, to now the bank balance is around we had calculated 6900. So to positive bank balance to 6900 pounds. So here it has been reduced to this pounds. Okay. Then we have the trade payables of the club has been reduced, okay, in the year from 3750 to now the trade payables has become equal to it has become reduced. The balance we had calculated for the trade 2250. So it has been reduced from that to 2250. So all this we can write which are the positive things that has happened. But however, we can say that there is still deficit, okay, for the year, okay, here 200, which is largely due to the irrecoverable debt. So deficit of is a small deficit of 200 pounds, okay, 200 pounds due to the high volume of irrecoverable debt. We saw that irrecoverable debt was around 1800 pounds. So return of 1800 pounds. If you write the figures, you'll get actual marks, okay. And there are still members who have still not paid for their 2022 subscription. So in conclusion, we can say that the overall position, okay, overall financial position of our Quarry Art Club 31st December 2022 has improved. Okay, so this is how you will answer.